Very warm welcome to this roundtable on funding options. We're really grateful for the five speakers who have so kindly spared their valuable time to form our expert panel to answer your questions on options for funding, both in the short term, the medium term, and indeed the long term. And as we all know, we're passionate about helping UK manufacturing become more productive, not just a little, but in a step change sort of way. And therefore, the three constituents of productivity improvement is, of course, skills, technologies, and the finance to make it happen. And if that's oversimplified for you, I apologize, but it's language in which I personally understand. And so often the finance side of it is slightly pushed to one side while we concentrate on deploying skills, investing in skills, and of course investing in the technologies. But it's so vital. It's really the blood that makes the whole thing happen. So could I just introduce everybody on your screens, starting with Bernie Skivington, who we're very lucky to have from the British Business Bank, who effectively are responsible for distributing and helping the SMEs from the state, full stop, using various different funding mechanisms. And I'm sure Bernie will tell us a little more about that in a minute. And then we have Carolyn Newham from Siemens, huge experience in funding manufacturing technology. Welcome, Carolyn. We've got Steve G, CEO of Industrial Equipment Division from Close Asset Finance. We've got Paul Smith, who's the area director from Lloyds with responsibility of leading an enormous team of SME finance experts in the manufacturing area, amongst other things. And of course, last but definitely not least, we've got David Bunker, who is a director of Compass Business Finance. Welcome and thank you so much to everybody. We have mentioned CBILS on some of the introductory literature to this roundtable, but I'd like to stress that I want that to be a fairly short part of this meeting because CBILS, as we all know, expire at the end of March, and there are some opportunities around those. But in fact, I'd like to have the main thrust of the conversation about how how we can get our businesses to have access to finance in order to make us world competitive in the post-Brexit and indeed post-COVID world. So if I could just kick off with a fairly straightforward question, which is how easy is it to apply for funding in the current most difficult environment? And if I may, I'd like to put that to Steve G from Close to kick us off. Steve, if that's okay with you.
Good morning, James. Good morning, everybody. Can you hear me? Just checking, James, before I start on mute. Yeah, it's a good question. And particular at the moment when a lot of people are working from home, you might think it's even more difficult to apply for funding. But all the usual avenues are still there through the websites, through the British Business Bank, in particular as well. That would signpost you to many funders who mainly have their own online portals available. And so actually applying, despite the fact that we are still in lockdown, it is not difficult at all. I think it's fair to say that we understand the small SME looking to make a big investment probably only makes that kind of decision once every 2 or 3 years. And the thought of approaching a bank or a finance company for funding facilities might be a bit daunting, but it's really not. It's really not. Most people are quite nice human beings and understand the business very well.
Thanks very much for that. Carolyn, Have you got anything you'd like to add to that in this COVID environment?
Yeah, it's difficult for everybody, I think, but for us, it's business as usual, really. We've got a strong machine tool team. We have auto decisioning, and we are strongly supporting our OEMs and our partners, just providing different ways of going to market. That's during this whole pandemic, just finding different ways to support them has been huge successes for us, because obviously Siemens in that space, as we hurtle towards digitalisation and Industry 4, just finding different ways to support our OEMs and our partners, providing finance support. We've had quite a lot of success. So, yeah.
Thanks very much. David and Paul, do you have anything to add to how easy it is to apply for funding despite the pandemic?
I think the background's worth noting, though, that when COVID actually first hit, the background in the financial services sector was that the banks had, since the financial crisis, had lots of regulation, a focus on compliance, and I think what the British Business Bank has done has enabled the delivery of money to easily get into the market. I think I think people have had different experiences actually accessing funding at this time, and what the BBB has done has made it very, very accessible for people to not only just survive, but also to invest where they need to in innovation or in technology. I think that's been really important. So I think, as Steve and Karen had said, I think some lenders have been very, very proactive. Some lenders have held back because of the fact that they're managing a huge forbearance issue. So we've had 2 rounds of requests from customers to have some support in their main bank accounts or their normal credit agreements. And I think right now, I think a number of banks have obviously stepped up to support industry, and that includes obviously the people on this panel.
Yeah, James, good morning, everybody. It's Paul Smith from Lloyds. My comments were, I think it's a credit to the British Business Bank that access to funding, I think, has been as easy as it's been for some time, particularly with the bounce back and CBIL loan schemes, which by the volumes that have gone through those schemes have been a huge success. I think the challenge facing many SMEs that we see at the moment is making sure that they get the right type of finance that's bespoke to their needs and to their business needs, and to make sure that before they take on commitments, they have the right people to speak to. And I think the high street banks have got a part to play. We aspire to play our role by being proactive with our clients, understanding where they're at, having an appropriate conversation, and making sure that we put the right package together, both in terms of their immediate needs and to your opening comments today, James, but also then ongoing needs in terms of future plans, and as important, be it working capital, which is really key to make sure that we can fund the growth and the aspirations that the country's got.
Fantastic. Thanks for reminding me, actually, that we all as an industry owe a huge debt of gratitude to not just the British Business Bank, but all of their partners, which includes you guys sitting on the panel. I know you've been incredibly busy working incredibly long hours, which some people may not be aware of, and it has been an incredible achievement. And so I would like to extend our huge thanks. Bernard, would you like to add anything to the conversation around how smooth the distribution of CBILS has been and the business support, and how you see funding going forward through various channels in terms of supporting UK manufacturing for a sort of short, medium and long-term resilience agenda, if you like?
Yeah, sure. Thanks, James, and thanks for inviting me to join the panel. As you say, it's been a pretty incredible last year, and the British Business Bank is not an institution that most SMEs borrowers would typically come up against. Our profile has certainly increased significantly in the past year because of the amount of press coverage, I guess, that we get, and because of the impact of the various COVID schemes that we've been operating. But it's really important just to underline, as the previous speakers have said, that the British Business Bank would actually be unable to do anything if it wasn't through its lender partners that it has. Because everything we do is via the relationships we have with those lenders. And I think it's important to, just responding to your first question, to first of all underline that whilst in the early stages of the schemes, much of this was done through the main banks. The main banks only represent around 2/3 of all the lending of the 70-odd billion that's been distributed through our partners over the last year. A huge amount of it has been achieved through many, many other lenders, whether they are other banks or non-bank specialist asset finance, invoice finance, alternative marketplace lenders. And the other thing I think is important to say is that these businesses are all very much open. And as well as bringing the schemes into play, what we've also been able to do in response to some of the challenges around funding, because these lenders, their raw material is cash, and being able to lend it to businesses is to be able to open the doors to the other financial institutions, where they're pension funds, insurance companies or banks, that are able to provide that funding in an efficient way through these other lenders, so that the liquidity in the market is sustained. And I think that's fair to say that liquidity is strong at the moment. Many of these lenders, their doors are open, they have capital to deploy, and certainly they're in a position to respond to the requests. You mentioned that CBILS is closing at the end of this month, at the end of March, sorry. That is correct, unless the Chancellor decides to extend again. But I think the important thing to say is that this is one programme, one tool in the British Business Bank's armour. And whilst the bank itself has only been around as a government-owned institution for the last 6 years, there has always been schemes like this that have been available to borrowers where they are viable businesses and where they're struggling, perhaps because they're early stage or because they don't have the collateral available to gain the finance that they need, that there are lenders out there that are accredited under these schemes that can help them. So people might remember the Small Firms Loan Guarantee Scheme, for example, that was around from the 80s. It was there for 30 odd years. And then in 2009, when the British Business Bank was being formed, we introduced the Enterprise Finance Guarantee Scheme. Again, an incredibly successful scheme for the 10 years leading up to when coronavirus came along. And we basically built the CBILS, or the Coronavirus Business Interruption Loan Scheme, on the existing rails of EFG. So it lifted a lot of the good things about EFG and enabled us to deploy a really important scheme, which has gone to £20 billion on its own in the past year, in an efficient and speedy way. The second stage of that was having got it deployed, we then brought on over 100 lenders to work actively in that scheme. So they have that scheme available to them. After the end of March, we are expecting a successor scheme to come on tap.
That's brilliant. Thank you very much.
A successor scheme to come on tap. It may not be, and it probably won't be the same as CBILS, but its intent in supporting businesses that need the money and can help lenders to provide the finance they need because there's a collateral shortfall or some other COVID-related impact. It will continue. And, you know, it doesn't mean to say either that many of the other lenders out there are not able to respond in a commercial way to the needs of these borrowers as well, because there's plenty other alternatives as well. So we're on tap to support, not just now, but going into the future, James.
Thank you very much, Bernard. It's, as I say, just an incredible job you've done. So one of the main jobs that I have as part of this round table is to try and look at it through an SME manufacturer's eyes. And if I'm sitting there thinking, gosh, this is great, why aren't I completely re-equipping my factory, because the technology has never been more available, more powerful, and indeed lower cost, really, in real terms, in exchange for productivity improvement. And the finance, thanks to all you guys, has never really been more available, and indeed a lower cost. One of the things that we're obviously very keen at the MTA is for people to be confidently re-equipping their factories appropriately in order to go forward. Just the last comment on C-bills. If I'm sitting here going, right, I want to make an investment in a high quality machine tool, just for the sake of an example, am I better off going to my technology supplier and asking who their finance partner is, or am I better going to my normal finance provider, who's going to be able to respond quickest in a fundamental way? And could I put that one to Paul, since you were the last to be on the list before?
Yeah, and I think the answers to that will depend on a number of different factors. I think for me, the C-bill scheme as is obviously has a repayment profile of 6 years, and I think it's making sure that the product ultimately that's taken to finance that machine is taken by the correct repayment profile to meet the needs of the business and to make sure that they've still got liquidity in the business. It's all right having the machine, but if you've then not got the working capital to kind of keep funding the machine and the infrastructure that supports that, it's making sure that you get the correct package and the correct profile for that machine that meets the repayment capability ultimately of the business. So I think the two go side by side, hand in hand. So that may be that you go through a traditional asset finance provider that will be able to get you that money quickly. Clearly high street banks provide that same facility. But then it may be that you look at an alternative way of funding that, be it through a commercial loan, or as is at the moment, we've got the C-bill scheme, if you believe that accurately fits. But for me, the thing that also is really key, and that we kind of see sadly on one or two occasions, is that in taking out the machine or chasing the turnover, the infrastructure wrapped around the manufacturer isn't at the same level, and that they haven't got the cash then to fulfill the contracts that they wish to do. So I think it's about getting the right balance, and that can be a mixture of asset finance, traditional bank funding.
Right, and so I could go to my existing lender, or I can go to my technology provider, depending. It could be either. But if I'm in a hurry to make an investment, C-bill or not,
yeah,
we know that as an industry, finance guys have been working, as we said, long hours,
yeah,
and sort of might be giving the impression of running hot in some cases. How do I get that really good advice that you've just started to provide there, Paul? If I'm sitting there in my company today. Carolyn, can I ask you the same question?
Hi there. Yeah, I mean, for us, strong engineering company, we've not really stopped supporting our OEMs and our partners and our integrators. We've not been part of the CBILS and the BBLS loans, but we have spent the time just bolstering up our core proposition. What do our customers want? What do our manufacturers want? Working with our Siemens partners. But we've just been kind of just working hard behind the scenes to digitalise everything, just carry on supporting all our customers. Yeah, we understand that the businesses need to invest. It's how we support doing that, various ways. As I say, the CBILS and the BBLS have been massively successful. But we remain focused on our core proposition, which is to support all our OEMs in. Well, what we've actually found the greatest success is finding a different way for our OEMs and our partners to go to market. So making their piece, the added value piece, just going that supporting them with the solution to make their machines, getting the machines into the market affordable. So added value finance piece tacked onto it. We've had a lot of success there. Just completing the whole chain, really.
Fine. David, Steve, do you have anything that you want to add on that front?
James, I think it's having variety. I think it's also having a partner that's able to hold your hand if there's any other bumps in the road. I think companies have experienced, that sort of calm that we had in the summer. A lot of hope was pinned on the vaccine. When the vaccine news came around, I know a lot of order books suddenly filled up a lot in the various sectors. And I think with the second major lockdown, I think that's put a frighten on a number of people. But coming back to the point I made earlier is that innovation is still happening. Lots of companies, SMEs, are finding different ways to differentiate what they do. So they've gone through different phases with CBILS, with COVID. Sorry, they've had to get emergency cash that's been available through the high street banks and some of the platforms. They've had to get maybe some forbearance on their existing agreements. They've had to then look at their headcount, because I think a lot of SMEs have been down to as low as, some factories obviously have closed. Some SMEs have gone down to 40, 50% of their normal revenue. But as things have started to normalise, I think a lot of SMEs still aren't, maybe 60 or 70% of their former production levels. So I think what it needs in terms of access to finance, I think it's worth looking at this variety that's in the market, looking at non-CBILS and CBILS facilities that are available from those that are providing it. And I think there's certainly what we've seen in the market is that right in the midst of a pandemic like we've never known before, companies are looking at, they've had to look at their headcount, they've had to fund that somehow and make themselves viable to get through the pandemic. But then what's happened, I think, in Q3 and Q4 last year is that business owners are now looking at machinery thinking, well, I might get back to 100%. I might, have to stay at these reduced levels. How do I then make more efficiencies in the factory? So I think a lot of the suppliers that are in the market are probably having those conversations with the OEMs and with the suppliers of looking at updating machinery and actually, looking forward to the recovery that's going to be happening and sort of post-COVID.
Thank you very much. Steve, sorry.
Yeah, James, I think to answer your original question, should a SME go to a technology provider or should it go direct to a lender? Both routes are as good as each other. I mean, some technology providers will have very close relationships with people like ourselves. Others won't. Through Finance for Industry, we have a lot of relationships with some of the major machine tool suppliers in the UK, as you know. So that's one route that would work for them. But approaching somebody directly is equally as good. And I think I referred earlier that there are various signposting places they can go to get help. I have to say I've got to agree 100% with what Paul at Lloyd's spoke about earlier about liquidity. And one of the things we take a lot of time to look at is the affordability of a loan and whether the SME can actually afford to make the repayments. Because sometimes it's too easy to get your hands on money, and before you know it, you're straddled with debt. So, we've got a duty of care to make sure that we look at affordability very, very carefully. But generally speaking, when we're speaking to typically an SME, as you say, who is making an investment decision, our attitude is that they're doing that because they think it's for the good of the business. So we always try and start from a positive point of view. It's probably a family business, maybe second, third generation. They're not going to risk the business if they don't think that investment is the right thing to do for that business. But it is important to talk about affordability and making sure they can afford the repayments, particularly on a Sybil's deal, because the first 12 months on a Sybil's deal is subsidised by the government. And after 12 months, we need to understand that when their payments increase, they can actually afford to make those increased payments.
Thank you very much. Very useful. Can I remind everyone in the audience that this is a very unusual opportunity to ask good searching questions to arguably some of the industry's finest experts in supporting manufacturing in the UK. So please do write your questions in the box, because this is a rare opportunity. Bernard, I wonder whether I might ask you a question which you may decline to answer, so it would be £1 in the box for me. But I understand that there is a scheme called productivity grants that it has started in Northern Ireland, and I'm wondering whether it's something that you are able to speak a little bit more about, but only if you think that the Chancellor has even a small chance of extending that to the rest of the UK, because obviously we're very passionate about the support for manufacturing post-COVID and post-Brexit.
It's not something that I'm particularly close to, James. I'm obviously, there's a number of other different schemes that the government and indeed other bodies are able to offer different businesses in different regions. And I think you mentioned that this is a particularly relevant scheme in Northern Ireland, which I think is actually fronted by a body called Invest NI. So it's a specific support group that is based in Northern Ireland. They do have a London presence as well, because they obviously need to also relate to various either government or corporate bodies in terms of support for their schemes. I think there is a similar grant or offering in England among many other grant schemes. So there are many others that SMEs can tap into, not just COVID related, but there is a bit of a minefield and a web of those if you dare to tiptoe into the relevant government websites. But I don't think there is a match for the Northern Ireland scheme currently. And in the same way that Invest NI, for example, doesn't offer a specific COVID debt scheme, for example. And then there is things like Scottish Enterprise in Scotland, obviously, which offers other different types of support. So it's very much a regional based programme. The government obviously does liaise with the devolved nations around the different support that it can provide. But as I say, it's very much a Northern Ireland initiative, which is probably driven by specific market gaps in that region.
Fantastic. Thank you so much, Bernard. And I apologise for throwing a curveball, I think it might be called.
Not a problem.
We're starting to get a lot of questions now, and I'm going to propose that people are able to ask them directly to the member of the panel that they wish to speak to. And if possible, could we start with Angela M? If you could enable your camera and mic, we would love to hear your question.
Hi, yeah, we were just wanted to ask the man from the business bank if we could sort of approach them and sort of get advice on the different grants and loans that would be available to a startup, because I don't think we would get the COVID help because we're such a new company. I just wondered if there was something else that we could do that would help us to buy this scanner, because we're getting a lot of quotes in for this type of work, but we're having to refuse them because we don't have the scanner. But we haven't got a huge turnover, so we don't know whether it's worth applying or we should wait till we build up the other part of the business.
I'm quite happy to respond to that on a business bank perspective, James. I mean, the important thing is I come back to is that we work with well over 100 lenders across schemes like CBILS. And it's although we set the eligibility criteria for the programme, the scheme is very much a delegated scheme. So each lender will have their own criteria and appetite of the type of loans that it can provide within the rules of the scheme. Having said that, there is nothing to stop a CBILS loan being used to support a startup or an early stage business. And indeed, we have provided some young businesses with quite a lot of support across the programme. I think the best place for you to perhaps go to is go to the British Business Bank's website and look for the CBILS and BBILS schemes. I'm not sure what the cost is of this piece of equipment, but under each of the programs, you can then filter to look at the accredited lenders that we work with in the programs. And there are various case studies on there as well, but you can filter down through those to sort of apply what sort of parameters you're looking at, that you're an early stage business, that you're looking to capital expenditure, and it can provide you with suggestions as to which lenders you might approach with the view to applying under the scheme.
Fantastic. Thank you so much. I hope that answers your question, Angela.
Yes, it does. Thank you.
Pleasure. Lynn Carefoot, would you care to ask your question and say who you'd like to direct it at, please?
Yes, thank you. So I'm managing director of an engineering company. We manufacture telescopic boom conveyors. In the early days of COVID, I applied for a CBIL, really as a sort of safety net, really, as I didn't know how the business would be affected by COVID-19. And I thought at the time that the criteria for getting a loan from the bank was potentially sort of easier than it would be if I didn't apply and applied at a later stage. Recently, we've had an inquiry from quite a large organisation that is, it's one of the online clothing supply companies, and we've potential to get an order in the region of £400,000. We generally take an advance payment from customers to help us fund materials for each order, and I made a preliminary inquiry to our bank as to an advance payment guarantee, as this particular customer was reluctant to commit to making a payment without a guarantee being in place. Now, this guarantee is in the region of £160,000. We've already had the CBIL for £100,000, and my concern is that the bank may already feel that they're overexposed to us, or they're exposed as much as they're willing to be. I just wondered if anyone had any comments. Maybe Paul would be in a position to answer that.
Yeah, Lena, it's a nice problem to have, and it's a good situation to be in. I would like to think that there would be your bank or your people who provide your funding would be able to understand your position and ultimately provide that support. I guess the considerations that a lender will apply is ultimately, is the business good for that level of exposure, be it the £100,000 and the £160,000 to which you're referring, and what is the best way of structuring that need so that the business can fulfill the contract, has the working capital to sort of keep that going, whilst at the same time make sure that the bank or the lender is comfortable with the exposure that it's got. So the answer to your question is yes, that can be done, and that may need to be a mixture of products to achieve that. It may be that the CBIL scheme has got a part to play. Equally, how do you fund your working capital then for the contract? And obviously for the advance payment guarantee, what security, if you like, is available so that the lender can be comfortable with the position that it's got? Because certainly at that level of debt, it would be normal practice, to be clear, that a high street bank lending money at that level would want that securitized in one way, albeit obviously the CBIL scheme does take care of that for a large part. So I think there are a number of options that you would have, my recommendation would be, and I'd give everybody that today, is be confident in approaching your bank. I think that the sector is in a much better position than we've been previously and through previous crisis. Other people have commented today in terms of the strong capital position of the UK banks, and they are now in a position where I believe we're in a much better position to help and support SMEs going forward, and absolutely to the current position that you've got. So I'd say speak to your bankers in the first instance, and I'm sure you'll find perhaps a response that you might not have got previously.
Thank you.
James,
Thanks very much. Thank you.
James, may I just step in and just add something to that?
Cool.
I think, again, thanks to the work that the British Business Bank has done in accrediting a number of platforms, Lynn, in supporting what you're doing, there are a number of lending platforms for loans that are under £250,000 with very good, reasonable rates, with flexible payment terms. Many of them you don't pay anything for a year. And if you, in terms of early settlement, some of them have no early settlement penalties. So there's lots of flexibility out of there with a CBILS backed term loan. And of course, you know, the banks, the high street banks are playing their role as well. So I think coming back to the variety, I think if you need an additional facility to support that from your bank, then there are lots there. And, you know, probably 2 or 3 very, very good platforms that you can access loans in probably, you know, no more than a week, depending on what your financial position of your business is. Does that help?
Thank you. Yes, it does. Thanks very much to both of you. Thank you.
Steve and Carolyn, have you anything to add to what's already been said?
Not really, James. I think Paul and David have covered it all. We're very much a secured lender. We do provide loans under CBILS, but we're very much a secured lender against the assets that we're lending against. So nothing to add to what's been said. It's good advice from both.
Yeah, I agree. Nothing to add on that. Yeah.
Excellent.
We're secured lenders as well.
Thank you so much. And thank you for your question, Lynn. Can we move on to Robin Ashworth? Robin, are you there?
Hello.
Excellent. Go ahead.
Okay, so unfortunately I missed the first part of the introduction, so I don't know who I'm talking to, but you sound as though you're talking sense. My name is Robin Ashworth. I'm from a manufacturing company, VaporMat. We manufacture equipment to go to aerospace, automotive, medical industries, ranging in 100,000 to £1 million at a time. We've been looking to develop a servitization offer, which creates obviously a challenge. This finance requirement falls onto us rather than the seller. This predates COVID. What's available in the finance market, and what's the appetite to develop this type of finance product, and what hurdles are we likely to see, and what's the best way to overcome them?
Okay, thank you for that. Is that one for you, Carolyn, to start to kick off?
I'll take it. Yes. We being even though we're independent, we are part of the obviously Siemens Group. So we're working with a number of our OEMs to develop such a model, and it's very much a work in progress. So it's how do we develop that servitization, get it out to market, give everything that you need. It's this. Start again. Working with our OEMs, working with all our partners, understanding the needs of the customer, what your equipment does, and basically putting something together in with you. So very much a partnership in getting the paperwork raised and how you go to market. But I think, Robin, it's a deeper understanding before we kind of get to that stage in terms of what you're actually looking for, because what we're finding for each one of our OEMs or partners or whatever, each model is slightly different. So how can we tailor it to specifically, meet your needs, meet our needs, what the risks are. So, there's all things that are possible. yeah, we can absolutely work with you on that. We're doing it a lot.
James, it's Steve here. Yeah, I think one of the areas going forward is people are going to look at rate per hour usage type agreements. I think that might be what Robin is referring to. You know, it's not as easy to put that type of deal together, and it's got to very much a three-way thing between the funder, the supplier, and indeed the customer. But it's certainly doable. It's certainly doable, particularly if the equipment has a good resale value at the end of its initial working life.
Yes, I just add to that. We're currently working on an automated proposition to go to market, bearing in mind people understanding that people want to sell things in a different way. How can we make it easier? How can we get it into the market? So how can we accommodate that? And just going back to your point, Steve, there's a big piece of work at the moment, how we automate that. I'll give you an example. We work with one of our a company that makes packaging machines, for want of a better word. They have all the consumables going into that, so they have approached the market, going to market in a completely different way. So what does it cost per unit to kind of put this out there? What's the documentation going to look like? All kinds of like different models. But yeah, we are working on that at the moment in automating that process, because the market is changing. How people are selling, people like yourself, the OEMs, different ways of getting your goods into the market with the finance piece to support the sale.
Yeah, James,
how we can work with them.
Yeah, every 5 or 6 years, James, there seems to be a thought process going on in the market away from ownership into usage, and to maximising the return you get from investment. And we're very definitely at that stage again, where people are now starting to talk about usage rather than ownership.
Brilliant. Paul, Bernard, would you like to add to this?
Yeah, I think this is an incredibly interesting area of debate, and obviously I'm going to comment from a British Business Bank perspective. I think the last year has been an incredible distraction, almost taking a year out for most people in kind of the development of things like servitization and equally green, zero carbon and other areas, ESG. The debate certainly commenced a couple of years ago around this, and it's not going to help you, Robin, at the moment in terms of what I'm going to say. But I think as we move more towards a servitization model, there are challenges around, you know, what happens to the risk around technology, around residual values in equipment, and who takes that risk. And that's going to sit in that kind of triangle that Steve mentioned between the manufacturer, the finance provider, and the business. And how does everybody kind of share that risk whilst, you know, having a profitable proposition to help manage that. And I think it's the sort of area that the British Business Bank, aside from things like CBILS, is very much going to be working on with the government to look at how could we potentially use something like a guarantee type scheme, if you like, to take some of the risk out of residual values, or, you know, encouraging finance companies, if you like, to take on the ownership of assets where they might face that technological risk if there's a sea change in technology and a lot of equipment and machines become redundant. You know, we don't want that to happen. So it's something that I personally have spent quite a lot of time looking into pre-COVID, talking to a lot of the associations. So it's certainly a direction of travel which I think will accelerate. And I think government recognises that, you know, so something that we've got to get back on track with quite urgently. So it's certainly a lot of talk going on around this. In the meantime, you know, you've got, you know, with Carolyn from Siemens, Steve from Close Brothers, there are other providers as well that will actively look at this kind of proposition for you and will have solutions. It's the challenge is to find the right lender that can provide that partnership for you and can bring that specialism to play. But it's certainly out there for you.
Yeah, I couldn't agree more, Bernie. It's a very interesting conversation. And in many ways, James, it leads us back to what you started at what you said at the start of this call, that these are ideas that will hopefully help this step change in UK manufacturing take place. We look at Industry 4.0, and we're all, from a funding point of view, we're all wanting to really get involved in that and just help the manufacturing in the UK develop as we all want it to. Sometimes, though, some of the assets are really difficult, and ideas like this, and where there are partnerships between funders, a British business bank, the end user, the suppliers, it can only bode well for the future and helping. What you said, let's create this step change in UK manufacturing.
Fantastic. David and Paul, have you got anything to add to that very quickly?
Well, I think James, before COVID hit, there was a big focus on UK productivity. Again, sort of following on from financial crisis, with changes in the environmental issues and productivity issues. So it's really encouraging to hear Bernie talk about the government's view on some of these aspects, and and on the ground for someone like Robin, that's got a business that's looking to get something, take an offering to a new, different level. So I think there is definitely, it feels like everyone's pushing at an open door at the moment. So I think it's if the government's really behind some of these issues, I think with the lenders on the panel as well, talking about needing to get behind this, I think that's really good news for innovation.
And James, I would make reference to perhaps what I've said previously, which is making sure that you've got the right funding package in place for the needs of the business in its totality, and that will be a variety of products, and not thinking that just taking out a single product will necessarily fulfill the requirements of the business. The other thing I would say, and I'm conscious of time today, is that one thing I do see is that I would say at the moment having cash and a war chest of cash is really good, and I think making sure that you've got cash for the future is really important. And what we're seeing at the moment is many SMEs are getting themselves into that position. So keeping hold of cash, I would say, is a good thing. Taking advantage of the various schemes that are out there at the moment to enable a business to keep hold of cash would be directionally the advice that I would give.
Fantastic. Thank you.
That's a really good point, that, Paul, and we're seeing that as well. And I know, James, you didn't want to focus on CBILS, and I don't think we've done that, but I think it would be wrong to finish the hour or so and not just remind people that the current CBILS offering will expire on the 31st of March. So if anybody is thinking about making that investment or raising that cash, now it would be a sensible time to go and have a look at doing it, because if you started to think about it as we get into April and they've missed the boat, as it were, then that could be a problem. And even though the scheme ends at the end of March, that's only for applications going onto the system. There's still a period of time after which the money can be drawn down. So it's applications only that close at the end of March. You don't have to draw the money down immediately, but obviously you need to have presented your business case and understand what the money will be for.
Thank you, Steve. David, very quickly.
Yeah, just to add to that, I think, and to what Paul said, I think where we could use the warehousing, use the phrase warehousing cash, which seems a bit extreme, but actually, with what we've all been through, I think we're experiencing a lot of SMEs doing just exactly that, and trying to, whilst keeping an eye on affordability and being able to repay the money. With the fact that a lot of facilities are there, which can be repaid free of charge if you don't need the cash. People are preparing not just for any continuance of the pandemic, but actually for needing the cash to come out of it and trade out of it. And coming back to one of the original points, James, you made about the next 18 months, is that we're seeing a lot of inquiries and working with not just the customers but suppliers on actually coming up with a wish list of investments in new technology for the next 18 months, and seeing how that can be a plan can be put together, matched with what the CBILS offering is right now. And again, what Steve said is really important, is that people can get their approval before the end of May and actually take delivery of it and later in the year. So I think people are looking past 2021 into 2022, what equipment will actually help the SME thrive. I think that's a real motivation for investment.
Perfect. Bernard.
Yeah, just very quickly, I hear the alarm bells ringing in terms of CBILS running off at the end of March, and it's certainly there to be utilised. I mean, look, I can't give you any specific message and commitment that a successor scheme will be there, but it's something that the Chancellor has announced that he said he will mention in his budget. There will be a follow-on scheme. That's as best as I can say at the moment. So what I wouldn't want is people thinking that if they have not got an application in by the end of March, they've missed the boat. And the other thing that I would say is that, of the three greatest areas of investment that we've seen across the programme to date, they are wholesale and retail, not surprisingly, construction and manufacturing. Manufacturing being the third of those, with around 13% of all COVID scheme loans that have been deployed. I think the important thing, though, for me, that puts it at the top of the list is actually the business population in terms of manufacturing is much smaller than construction and wholesale and retail. So for me, the impact is massive. It's a really important sector under the CBILS schemes, and it will continue to be in the follow-on scheme, with the objective of supporting investment that either the collateral value is just not sufficient for lenders to be able to provide the loan, but perhaps where there are technological challenges that make it difficult for the lender to assess that piece of equipment. So the guarantee from the government gives them the confidence to provide the finance.
Fantastic. Can I just say that I wasn't expecting to be as excited as I am as a result of all these conversations, particularly about the confidence that there will be some form of support on an ongoing basis, most likely. The fact that the industry continues to look creatively at supporting digitalisation, which have always been quite tricky, as has been explained in this conversation, so that the finance industry is there to support massive investment in manufacturing, which, as we all know, has a multiplier effect. So manufacturing may be seen as less than 10% of GDP, but we all know that actually it contributes at least 15% when you take the supply chain into the direct supply chain into account. So I'd like to remake those points. One of our other members of the audience has helpfully said it's worth looking at the LEP links for grants available locally, and we will post links on the website after this meeting, because I'm sorry we've nearly run out of time for any further questions. So if there's one last one, please put your hand up. But as far as we're concerned, we will put relevant contact details also on the website afterwards. So if people have follow-up questions, we'll make sure that you're able to get in touch after the session. So I'd like to once again offer my enormous thanks to our expert panel today, Bernard, Paul, Steve, Carolyn, David. You've been fantastic, and I am uplifted as a result of this session. Does anyone have a final comment before we sign off?
James, just from Compass's point of view and my point of view, looking at the market in the whole, I think variety is good. I think, again, because of the accreditation that the British Business Bank's given to a very, very wide range of different lenders, I think the suppliers and end users have an enormous variety to go at. So I think, what Steve said about making sure that you're presenting yourself with being able to afford what you borrow, but I think the opportunity to invest for growth and for the post-COVID recovery is very much there.
I think can I just add to that, Steve, James?
Yeah, you can.
We do accredit a large number of lenders, but there are also many other lenders that we don't accredit. Maybe because they haven't asked, but actually there are still many that do ask. And the reason I'm saying this is because the British Business Bank doesn't take accreditation lightly. It does a lot of due diligence on its chosen partners. And that's an important message for businesses out there that sometimes feel less than confident in dealing with a lender that they have not heard of before, that might be quite specialised or in a particular area. So if they can take any confidence from the British Business Bank's accreditation process, then that's quite appropriate to do so.
Fabulous. Steve, do you have a closing comment of wisdom?
I don't think so. I mean, we've supported lots of businesses, particularly in the last 12 months, who've invested in technology at a very difficult time. And Sybil's has played a huge part in it, was enabling us to do that. And most of those businesses now are going from strength to strength. And I think the future is very positive, James. Somebody mentioned forbearance earlier, and we all got inundated with forbearance requests this time last year. But, you know, we've got something like about 90% of customers who we gave forbearance to are now just paying us again. And it's we were there when they needed us. And, you know, I think the future is very positive, particularly in the manufacturing centre.
Well, thank you very much. So I think the overall message, therefore, from everyone is what's everyone waiting for in terms of investment? If you're ready to put your investment plans into place, crack on. And if you haven't quite formed your plan, crack on with making a plan. I think that's probably the main thrust. Again, to our expert panel, we are eternally grateful to you. And as I say, for the audience, thank you so much for attending this roundtable. We will put further details up and a recording on the website in due course. Thanks to everyone. Enjoy the rest of your day.
Thank you. Bye.
Thanks, James.
Bye.
Farewell.